Hi everyone, this is my last video for the day. This is the fourth stock that I traded and the market is down. I did not have a good run and quite honestly this was clearly overtrading. So let me explain to you what happened here. With this particular stock, as you can see in the day it's up about 107%. That's incredible. That's just crazy how much these stocks can run, and you just have to catch one of these every few months and you're good to go. However, my case was different today and I want you to learn from it. I want you to understand what not to do, and I obviously want to recap what happened today. So pretty much as you can see, and I already explained in previous videos, when a stock breaks out from a previous price level that has been held for a while, it is likely to run. Now, you never know how far it's going to run. It can run a few cents or it can run all the way up to about 100%. You never know that. In this particular case, ASTI was a big runner. And when you check Yahoo Finance and you try to find some news on it, there's no news on it. So chances are it's just momentum trading, or sometimes there are rumors about a certain company. Sometimes there are hypes or pumps. However, in this particular case, I couldn't find any news on it in relation to the big price jump that it just did today. So right now what we're looking at is just a simple price action that happened throughout the day, and during a bear market when all the indicators are down, it's really difficult to find big runners. However, given the fact that it's a scarce resource, so to say, stocks that are running, more and more people tend to gravitate towards those stocks. The more people that trade the stock, the higher it's going to go, especially in a stock that's so low in value. As you can see, nothing really happened in the past days, and then just suddenly there's a huge volume surge that enabled the stock to go to incredible heights. And it may not be over. To be quite honest with you, it might still run tomorrow. I will be watching it tomorrow on my watch list. However, trade with care, handle with care, because this is something that could wipe up your account in an instance. Like, this is so volatile that it can just simply jump up and down within seconds. So in my case, what happened here is pretty much very similar to what happened already previously with me today, and for some reason I can't put any markers on it right now. However, that doesn't matter. I can just explain to you that I bought the stock at about the highs of the day at about 24 cents, 23.80, because the stock, as you can see, was gradually breaking up from the previous low. It was gradually moving up. There was a certain trend line associated with the stock, and this is the line, and there's no saying when it's going to stop. So I anticipated I'm going to buy about 23.80 at a certain dip from the recent highs, and just ride the stock for 10%, 15%, up to the point when I see there's a weakness, and I'm just going to sell it. Now, I bought it at that price level, and it went up a little bit, but it was not enough for me to sell. So I just followed the stock go down, and apparently when someone sells a big chunk of stock, a big position, it tends to impact the stock in this way. As you can see, this is a 5-minute bar, and suddenly, someone sold a big position. There was a little panic. Everyone started selling, and as the stock broke down, since I had my stop loss set, I got kicked out at about 21.5 cents. If I remember correctly. So what happened here, I traded again way too late. You just cannot chase a stock. Otherwise, yes, there's a chance you're going to make money. However, your risk and reward is a lot worse than it would be around here, let's say. Because in theory, if you buy a stock at about 13 cents, all your risk is only about 1 cent, 2 cents, right? If it falls back below this line, you'll sell. However, if you buy a stock so high up, your actual risk is about here, where you can see the first accumulation or consolidation of the price, which is about 19 cents. So there's a good 5 cent in it, which is a good 20%. It's not a good risk reward clearly a bad trade. I want you to learn from it, and I want myself to learn from it. That's why we're making this video, and that's why I'm explaining to you how it happened. Now, stock went down. You know, I set my stop loss. I sold, and I took the loss. It was not a huge loss, but again, if you make a stupid trade, you're just mad at yourself. So that's why it's important that after every trade, after every end of the day, you just go back and try to analyze what happened. And if you do analyze what happened, and if you remember what not to do the next time, maybe you'll be able to do it. However, it's not as easy as it sounds, because as you can, once you sit in front of the computer and you see the stock go up one by one by one by one, you wonder, maybe I should get in. And that's the point, when you have to sit on your hands. That's what differentiates you from a successful trader. That's what differentiates people, pretty much, because people will just buy it and then not even set a stop loss, and this could have just easily broken down to 14, 16 cents. There you go, half of your money gone. However, if you trade stocks that are well-based and there's a reason for your trade, then there's a good chance you're going to make money. If you trade stocks that are like this, the least you can do is set a stop loss, because otherwise you're really putting yourself in danger. Okay, so that was my fourth trade. Again, it was not a good trade. Today was a good lesson for me. It was a good time to kind of like reflect on all the events of today. And if you follow my blog, you know that I made about $350 yesterday. I lost the exact same amount today. So I lost 1 day's profits. Not a big deal. You should not be emotional about it. However, obviously you should come back and learn from it. That's the moral of the story. And you can always come back and be angry about the after hours or the afterworks, because the stock went all the way down to about 19 cents. However, as you can see, this is extended hours, means after hours. So after the market is closed, where does the stock trade at? And as you can see, it currently trades at 24 cents, right where I bought it. So had I not sold it earlier, obviously I would be at break even, if not with a small profit. But in trading, there's no should have, could have, would have. In trading, there is a plan. If you execute the plan, then at least you're good to go. At least you follow what you planned, and then hopefully that plan that you put together is a good one. So that's from me for today, and I'm just going to post the daily post, and please shoot me any questions or comment under the videos, because I would love to hear from you. I would love to hear whether you have any questions, and of course don't forget to like BreakoutBuzz on Facebook, and don't forget to sign up via email subscription on my blog, so that you can get the latest posts and latest videos the quickest. Okay, so everyone have a good night, stay safe, and I will get back to you tomorrow. Thank you. Bye bye.